Good morning, good evening to the audience and our guests around the world. Me, myself, Mohammed Shanawaz, President of GBA UAE. George Sebastian is GBA UAE advisor, and our operations manager, Maharaj Manoharan, welcome you from this beautiful city of Dubai. Before we start the discussion on central bank digital currency, we want to tell a bit about GBA. GBA or Government Blockchain Association was started in USA around 2016 by Gerard Dache, and now we have around 50 chapters around the world. GBA UAE was started around February 2020, and since then we have hosted many top leaders and blockchain professionals. GBA is a technology agnostic global association whose mission is to promote and accelerate blockchain adoption in government sector. We do that by education. We have niche specific courses like blockchain, legal, healthcare, cybersecurity. And we advocate by holding panel talks like this one, and we have working groups where blockchain professionals and thought leaders discuss ideas and updates. And most importantly, we're gonna have a conference next year on March 2021. More of that the end of this webinar. And we innovate, we work on some exciting projects. Some of them will be useful in government sector. For example, we have a DAO project working on. DAO will help to coordinate and make decisions on blockchain easier for its chapters around the world. We also making a fintech dashboard where it collects crypto data from various sources and shows the impact of cryptocurrency adoption in public and financial sectors. Before one disclaimer, we are affiliated with any public or private entity. All advice should only be used for educational purpose. With that, I'm going to start today's session with a question. What is money? Money, according to some expert, is fundamentally a special kind of IOU that performs few functions. First is storage of value, so we can use them in future. It's a medium of exchange, so we can transact fast, and also it's a unit of account. We can price different goods and services, and we can discern the differences between the value using the price. Today, we're going to talk briefly about the evolution of money from bartering to stones and shells to Bitcoin and CBDC. So before the invention of agriculture, we were simply hunter-gatherer. We had simple requirements. So we bartered, that is, we exchanged tools, for example, tools for meat. But the problem came in when we're exchanging something with perishable goods like food, and or somebody wanted meat but didn't want tools. So there was a requirement for a medium of exchange. So after agriculture was invented, as society grew complex, objects like stones and shells were used as a medium of exchange. By 700 BC, first coins were made using precious metals. And as trade and commerce grew, it became very convenient for merchants to carry heavy coins, and also it was insecure due to theft and piracy. So banks emerged where they said that you can store money and in return they give you IOU, a paper. So the merchants can go in other city and just redeem their money. So it's safer, it's easier, and convenience, security. So over the years, many IOUs, many banks emerged. It was harder to manage. So government came in and they formed central bank, and they said that from now on there should be one IOU or a paper which is known as representative money. That means the money which is backed by currency, can be silver or gold. In 18th century, Bank of England was the first to use a golden standard. Previously, they used to use silver, but the use of the silver, because they bought a lot of tea from China, so they switched. They were out of silver, they sort of switched back to gold. So fast forward post-World War. After World War, After World War, US ended up with two-thirds of the world's gold. In an agreement called Bretton Woods, US government said that, claimed to other governments that they could exchange US dollars for gold. And you can use US dollars for trade. And this is how US dollar became the dominant international currency. But has US gone into, over the years, they got into war like Korean War, Vietnam War, Cold Wars. They printed more money than the gold they had. And some governments suspected this. So around late 60s, they started exchanging US dollars for gold. By 1971, President Nixon announced something which was shocking, and this event was known as Nixon Shock. He basically said that you can no more exchange dollars for gold. So then what? Then US dollar is pegged to nothing. And this is how currency established by government regulation that does not have any intrinsic value or use value, which we know as fiat or free floating currency, was born. Now, fiat is a great medium of exchange, but is it a good for long-term storage of value? Now, this graph, thanks to Gerard for pointing this out, for giving this graph. This graph shows supply of money over time, money printed by federal bank in US. These gray areas are basically the recession years. This is 2008 recession, this is pandemic. If you notice, number of, the supply of money has increased. And if you notice, since April 2020 till now, you see this curve, a huge increase. That means we have printed more money in 6 months than past 10 years. So as more money is printed, the purchasing power of the money reduces, and this is known as inflation. Apparently, some group of people did not like the fiat currency and started working on a digital cash independent of government, pegged to something valuable. These people in early 90s formed a cyberpunk mailing list, and where various geeks or authorities exchanged ideas on how to make a digital currency and how to solve some problems for the early versions of digital currency. So here's a list of some early version of digital currencies. Like, for example, eCash was the first cryptocurrency by David Shaw. There was B-Money by way he was quoted in the Satoshi's white paper. And the one that was closest to Bitcoin was BitGold. And BitGold was made by Nick Zappo, who used to work for David Shaw. And what I'm trying to say is the evolution of digital cash is really, to Bitcoin, is really, really interesting. And I want to point out two things. The first thing is genesis of Bitcoin was a result of more than 30 years of work of various individuals, and Satoshi put the final puzzle and took off. And second thing is Bitcoin is one of the many iterations of many of the versions of the digital cash that took off, but that doesn't stop the evolution of digital cash. And we believe that there will be much more better cash coming in. So let's talk about Bitcoin. Bitcoin, over the years, this is the supply graph of Bitcoin. And if you notice that it's completely inverse of the fiat currency, over time, the supply is decreasing, right? So when the supply decreases over time and there's a demand or same demand or improved demand, the value increases. So Bitcoin is more deflationary. That is, the value increases over time. For example, one Bitcoin was 31 cents in 2010. Today, one Bitcoin is $11,500. So Bitcoin has a storage of value, but it did not work as a great medium of exchange. Why? Because the problem with deflationary currency is that people like to hoard, or we call in Bitcoin's case, hodl, and they don't want to spend because they anticipate the value will increase over time. Just ask the Florida man, he spent around 10,000 Bitcoins in 2010 and ordered 2 large pizzas. which is now worth more than $80 million. So that was the most expensive pizza ever ordered. So, going back to this one, the Facebook saw an opportunity in cryptocurrency space and wanted to create their own currency. So by June 2019, they announced the launch of Libra project, which is a stablecoin. Stablecoin is basically crypto assets pegged to a fiat currency. So Libra said it's going to be pegged to US dollar, euros. And this panicked many governments around the world. Why? Because Facebook has of now 2.7 billion Facebook accounts. And Libra project mainly mentioned that they're going to target 1.7 billion unbanked people with no bank accounts. So Libra had the money and the means to launch it, and this could threaten the central bank's monetary sovereignty and financial stability. At the same time, make it difficult to supervise and regulate payments. So the launch of Libra, in fact, accelerated the development of various what we call central bank trying to issue currencies called CBDC. What is the topic today is central bank digital currency. And countries like China, Barbados, Sweden government were the first ones to start the pilot programs. So what is CBDC? So according to IMF, CBDC is defined as a digital representation of a sovereign currency issued by a central bank or any other monetary authority. So the difference between CBDC and the digital, most of the money right now are digital, is that this digital money is converted by third party like the banks or like Visa or PayPal. But this is the first time where CBDC is going to issue a money in itself as a digital currency. Today we're going to talk about possible design consideration of CBDC, timelines of launch, privacy, and other. We're going to discuss other topics. To discuss, we have an amazing list of expert panels. Our first panelist is our distinguished president, Gerard Dache. Gerard is the president of Government Blockchain Association, and he's passionate about improving transparency with blockchain government sector. He started GBA in 2016 and is very active on promoting voting in blockchain and passionate about implementing blockchain payment systems for government sector. He also runs a famous podcast, The Future of Money, Governance and Law. Our second distinguished guest is Sonia Davidovich, who has been with International Monetary Fund or IMF for more than 11 years. She's an economist in the offices of Managing Director and a digital expert in the IT department of IMF. As a digital expert, she's working on central digital currency implementation considerations and is also a founding member, advisory board member of IMF Innovation Lab. Our next guest is Alex Tapscott, who Alex, along with his famous Don Tapscott, co-founded the Blockchain Research Institute, an institute investigating blockchain strategies, opportunities, and use cases. Alex is also co-author of the best-selling book, Blockchain Revolution, and recently released Financial Services Revolution, which is a book on how blockchain is transforming money, markets, and banking. He is also an advisor to IMF, Elections Canada, and World Economic Forum. Our fourth guest is Gabriel Abate, who co-founded BIT on 2014. It's a financial technology company where he's now executive chairman. In February 2016, BIT launched digitized version of Barbados dollar, known as M-Money, which was the world's first example of digitized fiat currency approved by a central bank. Recently, in February 2020, BIT secured a contract to create a digital Eastern Caribbean dollar for the Eastern Caribbean Central Bank. We're going to talk more about the projects in the panel talk. Our next guest is Vipin Bharatan. He's the founder of DLT NYC, a digital transformation company. He's also chair of Identity Working Group in Hyperledger and has more than 30 years of experience coding and working for companies like Tata, Audible, and BNP Paribas. He helped create a CBDC project on Ethereum called eThaler. He's also a frequent contributor to Forbes magazine. I would highly recommend reading his articles because you learn a lot. Our next guest is Dame of Honor, Sinya Sipek, who has been working for more than 25 years in Ministry of Finance, Tax Administration in Croatia. She's currently involved as the head of tax risk analysis in Croatia, where she analyzes impact of applying new technologies such as blockchain on tax collection. She's also a lecturer at the University of Zagreb in the Faculty of Law. And most importantly, she's an active GBA member. So welcome everybody. It's an honor and a pleasure to host you. We'll start the panel discussion, and the audience, if you have any questions, please ask on the chat box. So everybody is ready right now. Let me just switch this off. Let me get the video on. All right. So I guess the first question is, tell us briefly how you are involved in creating policies or executing projects or spreading awareness of CBDC project. Are you optimistic, pessimistic, or skeptical about the launch of CBDC? I would go first with Sonia, please.
Hello, everyone. It's an honor and a pleasure to be on the panel today. So I was part of a working group that has looked at the nuts and bolts of CBDCs, not just like a high level view of macroeconomic and monetary policy considerations, of really going into the detail of like what a CBDC could be designed like, what some of the operational considerations are. And one of my colleagues who's in the audience today, John Keefe, and I have recently published a paper on a retail CBDC design considerations, actually more of a survey of existing literature and projects that exist out there, but really also hones in on the details, the nitty gritty of like what a CBDC could look like and what central banks should consider when opting to issue a CBDC. I'm happy to share the link to that paper, which was published just a few months ago.
We already sent the link to.
Okay, great.
Yeah.
Perfect. Yeah, check it out, and feel free to get in touch with me or John and anyone of the authors. The emails are listed actually in the cover sheet of the paper. If you have any questions about it, it's really it's quite an extensive volume of paper, and it requires like careful reading because it's quite dense. But yeah, if you're interested in the topic, please do check it out and let us know what you think about it and if you would like to discuss further. And basically this paper will serve more or less as the basis for a technical assistance program for countries, for our member countries, the IMF member countries. We have 189 member countries, and as you're well aware, some of them are considering issuing CBDC, so they're looking to us to for advice and guidance on how to go about it. As one of the core mandates of the fund is capacity development that we offer to our member countries. So this will become one area that we will be closely engaging with our members on. Of course, they will issue issue a request or approach us on that particular topic, and we will then engage and see where they stand, what they're thinking about, what their rationales are for issuing the CBDC, and so on, really examining the whole area in a little bit more detail. And to your question about the timeline for issuance, I mean, everyone asked that question. It's kind of interesting. I do think it's a very complex project, and this is what we're trying to kind of bring out in the paper as well. It's not just a simple IT project. It's complex in so many layers. There's the policy considerations about disintermediating the banks, potentially IT security, legislation, regulatory frameworks. So there's a whole area of things that need to be considered for central bank really to earnestly engage in this project. So it's not something that somebody can do on the fly, but rather it is something that will take years, and the central banks to kind of accomplish, just to do the initial due diligence phase will take years, and then to really issue it will probably add a few more years to it. So because, you know, as you're kind of launching a CBDC in a pilot environment, which we consider best practice, you will gather data that will require you to go back possibly and iterate on the product and really go back to the drawing board in some instances and rethink some of the design considerations, rethink some of the legislation. So in my view, it might take a little while before we actually see CBDC in production, possibly another couple of years, although, you know, there are news reports about some central banks being more active than others, and that's certainly a welcome development. But again, I do think that the complexity of that project of the product itself is something that really truly requires a couple of years of serious work and rework. So I'd say like medium term, like 3 to 5 years from now on.
Yeah. Okay. Thanks, Moni. The next, I would say, Alex.
Yeah, thank you, Maud. And let me say it's a pleasure to be on this panel discussion. And I found your presentation was excellent, very succinct, but comprehensive. So thank you for walking us through some of those pieces. So the Blockchain Research Institute, our organization, is the largest independent blockchain think tank in the world. Our members consist mostly of large corporations and global governments and other organizations. So on the corporate side, we've got a diverse sort of group of companies, everyone from Exxon, Coca-Cola, and Pepsi to banks, insurance companies, and others. And on the government side of things, we're working closely with national, provincial, and state governments around the world. Financial services is one of the main areas of our research, and money specifically is something that we're especially focused on right now. The future of money is a subject which features prominently in the new book that you mentioned at the beginning, Financial Services Revolution. I've added a link in the chat for everyone if you're interested in checking that out. I think you sort of summed it up well, which is that, you know, money is one of the most enduring and important innovations in human history, and it's taken many forms over time. And we are on the brink of one of those once in a generation or once in a century shifts. I think something that's probably on the scale of the Bretton Woods Agreement that came into effect after the Second World War, which is that money is becoming digitized. And it is becoming digitized in a number of different ways, and there are various different actors who are playing an important role. You mentioned central banks. Obviously, central banks have been the traditional creators of fiat currency, and now certain central banks have their eyes on digital currencies as a way to change how they do things. And the biggest innovation we're seeing there is out of China. And the reason for that, I believe, is that China looks at the world today with the US dollar as the global reserve currency and would like to see that role diminished in some way so that it can export its economic model to the rest of the world and so that it can exert greater control at home. You're also seeing big corporations. You mentioned Facebook and Libra. Stable coins, I think, are another important development. Big technology companies have completely captured much of our social interactions and the way in which we consume media, and now they've got their sights set on how we conduct our financial lives, on our economic lives, and that's a much bigger opportunity. And then, of course, you have an emerging civil society on the internet, which is advancing other options that are not controlled by state actors or by corporations, Bitcoin being the most obvious of that. And I think that these three forces, not just CBDC, but these three forces together are on a collision course that's going to define, the next decade of humanity. The battle between the US and China could be a new front in the tech Cold War, which has already begun. The role of stable coins issued by or created by corporations forces us to sort of challenge what we think about money and democracy and the role of companies in the economy. And then Bitcoin remains a dark horse, which I at least hope remains a viable alternative. Because people deserve choice. So that's sort of a high-level sort of way that we think about it, is that these three concurrent forces all colliding, each of which has their very own different dynamics, actors, and objectives, And in order to talk about CBDCs, I think you have to talk about it in the greater context of all these different kinds of money.
We'll do so many aspects. Thanks, Alex.
Yeah.
Senior, please. Senior, sit back. Yeah, Senior.
First of all, thank you very much, and hello to everyone. Greetings from Zagreb, Croatia. So I'm involved in CBDC because tax authority always monitoring and is obliged to monitor what is going on in fiscal, monetary, or technology environment. So we have to be ready and follow new situations. So one of them is, of course, CBDC. And this is actually part of our work. And if it's necessary, we are working working groups, our participants, for example, in working groups which are in charge of central banks. So a lot of things around us, if you look at that, is somehow links to taxation. So also I'm involved in CBDC through the research study from by Government Blockchain Association is about adoption of cryptocurrencies and impact on government, but part of this study is of course CBDC because it's a very important part. Okay. So this study will be present in Washington next year in March. So for the CBDC, actually I'm the optimist because I recognize that during this pandemic, the activities about the CBDC are not stopped. For example, in March, I think this year, 1 month before lockdown, Bank of England issued a paper about the benefits of retail CBDC. So from the more than 17 or 18% of institutions, according to BIS, developing proof of concept for CBDC. So that's something that moving forward. And this situation about pandemic actually accelerate everything. Because if we have the sign of the, how should I say, cashless society more and more, and we have the sign now, especially now, that is the sign that we are moving on to something new as a digital money. And of course, I'm optimist because for me, my opinion that the best will be using benefits from CBDC for the citizens. So general purpose, CBDC accessible to a broad public. Okay. Actually, COVID-19 accelerate that government started to rethink about monetary policy. And of course, my third, in a third way, I'm involved in CBDC because in my personal research is about tax coin and how will CBDC, if it will be alive, will have an impact of this tax coin. And but I will agree with my colleague from IMF, Ms. Sonja Davidovic. This is a very complex project, but I think that 3 to 5 years are really enough, and we are in digital era, so I think that will be alive. Yeah.
Thanks for this response. Vipin? Vipin, are you on? Yeah.
Hey everyone, thanks to the UAE Government Blockchain Association for inviting me. A couple of points. First, I come from Kerala, which is South India, but I live in New York. But the reason I mentioned Kerala is because Kerala was the place where everybody went to There's a long connection with the UAE. There is, Vasco da Gama, for example, landed in Kerala.
Yeah.
And all kinds of money has been found in Kerala, like the Roman coins that circulated back before Christ and various other coins. And today is the harvest festival of Kerala, which is called Onam, secular festival. So I wish everyone happy Onam. And I want to talk about my involvement in this in CBDC, but before that, I have to say that I'm an engineer primarily, and I worked in many financial institutions and media companies before coming to blockchain, probably early to 2014. And I swim at this point in the blockchain sea, which means that I deal with all aspects that relate to blockchain, especially the technical aspects. And I've been involved in R3 and digital assets, and primarily in Hyperledger, which is an open forum, open standards forum. So my, I'm a chair of the Identity Working Group and also the Capital Markets Working Group, which I launched. So in the Capital Markets Working Group, we decided to start an experiment, because we also have the Hyperledger Labs, an experiment that is not just talking about CBDC, but actually creating one. And at the outset, we realized that none of the CBDCs that you hear about are based on any standards. So we started adopting the standards from TTF, Token Taxonomy Framework, to create a CBDC using Ethereum ERC 1155, which is a multi-token standard. Anyway, to cut a long story short, we created this project, and we demonstrated it to several people, including to John Kiff, who's in the audience. So, and we also spoke with Bank of England guys, a lot of other corporations. So that brings us to the next stage in the story, which is we wanted to create more than just a coin that represent in the first phase a wholesale CBDC, but we feel that the distance between the wholesale and the retail is low, and we feel that it's a natural evolution of that. But we're also interested in integrating with all the different things that Alex was talking about, that the payment leg should really be able to handle stablecoins as well as cryptocurrencies for any global asset trading. And that's what we're going towards. But the CBDC question will also depend on standards. Standards are going to be extremely important.
Okay.
And we are working with DCGI, Digital Currency Global Initiative, which is housed in the ITU and has collaboration with Stanford. So obviously it is a complex topic, as several people have mentioned here, but we should not be afraid of complex topics. We humans have built complex systems before, and I'm sure different countries will advance into the next age in at different rates. People who have seen that the Chinese government is already piloting CBDC in several cities with the collaboration of not only the Chinese companies, but also global companies, other, including retail organizations. It's not just, so different countries, depending on their appetite, will arrive at CBDC at different rates. It depends on the impetus behind it. If it is coming from the highest levels, then obviously they will get there faster. So to tell you the truth, asking a question about the amount of time it'll take for CBDC to come to fruition, I think it depends on the country. It depends on the will of the people, depends on the need. And it depends on real solutions with standards, regulations, all of the other elements that have to come together to create this solution.
Great, people. Gabriel?
Hi, good morning.
Yes.
I just want to say thank you to the UAE Blockchain Governance Group for having me today. I think I'll touch on my involvement with CBDC and go back to 2014. Projects like Mint Chip in Canada and Ecuador at the time, they were discussing the concept of creating a digital currency at a national level. Back then, as you're aware, Bitcoin was one of the main cryptocurrencies that existed. I co-founded a company called Bit that in 2014 proposed to the Central Bank of Barbados to create a national currency on top of Bitcoin as a second layer protocol. Furthering that, I noticed on the start of the call, you had mentioned Barbados doing a CBDC. And I just want to correct you to say that it's not a legal tender nor a CBDC that was done in Barbados. That would be the Eastern Caribbean Central Bank. I'll get to that in a moment. But in Barbados, what had happened was in the proposal, the governor at the time, De La Warrell, had given us the permission to launch the technology as what akin towards a stablecoin. That technology would later have been used in the pilots that we would have been launching with other central banks. In 2017, we released, I co-authored the first central bank digital currency white paper, going through the concept of what a CBDC would be. And over the years, have educated many councils and groups and organizations on the concept of CBDC. Quite a number of world tours on trying to get central banks to understand this. And right now, as it currently stands, our company Bit, 1 in every 20 households on the island of Barbados approximately are using or have access to mobile digital dollars. And currently, as it currently stands, in 4 islands within the Caribbean territory, 4 individual countries under the Eastern Caribbean Central Bank Currency Union are actively deploying with citizens, merchants, and licensed financial institutions such as commercial banks, an active rollout of a CBDC pilot in collaboration with BIT and the Eastern Caribbean Central Bank. So that leads me to where we are with central bank digital currencies. We're seeing several pilots around the world, from Cambodia to the Eastern Caribbean to Bahamas to China. And I think the colleague from IMF is right in that it's going to be a while before we actually see this thing come to full fruition. I've been one of the persons that have been on the frontier and the front line of CBDC, and I couldn't want it to come any sooner than the next person. But the reality of it is, it's complex would be one way to describe it, but it's more along the lines of being responsible. So from a perspective of technology and deployment, CBDC is absolutely ready for the market. From a perspective of the central banks and the monetary authorities with their operations, their mandates, their cybersecurity policies, and the list goes down, they're absolutely not ready. Their societies, their merchants, their licensed financial institutions, from their commercial banks to their credit unions, they're not ready. And the key component here is to understand that some are more ready than others, as was said just previously to this part.
Yeah.
And no, in my experience with speaking to well over 30 governors of central banks and dozens of central banks on the topic of CBDC over the last 4 or 5 years, no one central bank is the same. Every central bank has a different need or desire for wanting a CBDC. One is financial inclusion, one is democratizing the payment system, one could be for cross-border settlement. In the case of the Eastern Caribbean Central Bank, what's quite interesting, it's not just a retail CBDC, it's also a wholesale that's being used at all levels of the money supply chain. And
quickly tell the audience what's the difference between retail and wholesale CBDC? Yeah.
Absolutely. So retail CBDC is typically your low volume, high velocity transactions that happen at the consumer level. This would be your domestic payments, such as I'm buying a coffee. And that coffee and that transaction were completed using digital currency. The wholesale CBDC, on the other hand, is typically macro or larger scale settlements that happen between countries, or settlement that happens between two correspondent partners. It could be, for example, let's say Barbados and the UAE clearing and settling to each other, happening between two commercial entities. Will the first mover of CBDC? No, the first mover of CBDC will not take over the world. Sorry, the question just came in from one of the audience in text. The reality of it is right now is that we're seeing so many initiatives at different phases. I could speak to the one in the Eastern Caribbean and to the governor's words where this is not a pilot, this is not a test, this is the real thing. And while he is taking the responsible and careful approach towards deploying this initiative, it very well is for him something that's real. And I'm suspecting that we might see a real deployment, and I say real as in it's no longer constituted as pilot or beta. And I would say that we might very well expect to see that in less than 12 months at this stage.
Fantastic, fantastic. Thanks for this. George, you want to go ahead? Yeah.
I think we're on a major outbreak of paradigm shift. The famous book, I guess, written by Alex's father almost 30 years ago. But this time the paradigm shift is the one that is impacting the way we do trade internally within the country through e-commerce, but also external between countries. Of course, we live in a much more polarized world than we used to live a few years ago. So the CBDCs are actually going to play an important role way forward. I think, and I would like to hear from the audience, how do you see creating an ecosystem that enables these CBDCs to interoperate and cooperate together along with the existing stakeholders of the traditional financial system? Otherwise, we're going to end up disintermediating a whole infrastructure, and it is going to be quite risky in the long term.
You're asking anybody specifically?
No, no,
well,
it's open to the entire audience.
Okay, go ahead. Yeah.
George, if I may, before the audience jumps at it, from a track record and experience perspective, this is a chicken before the egg scenario. How do you deploy a central bank digital currency and then expect people to use it when there's no real utility? And we faced this problem, and that's where Barbados really comes into the light here, in that Barbados was not an official legal tender. It was not issued by the central bank, nor can it be constituted as a CBDC. However, it was the concept and the framework shy of the central bank themselves pressing the issuance key and managing the reserve of the dollars backing this stable coin. But the idea was, how do you then get a society to adopt this? How do I get a merchant to agree to take Barbados digital dollar when there was no one spending it? And we spent 2 years building that out to the point where almost 10% of the islands on this platform at this moment. And there's still obviously a very long way to go. But George, what's interesting about what you asked is not breaking the traditional system. And that we were very cautious and understanding that this could have, if implemented and if it did have an S-curve growth like a hockey stick, we could very well expect to see a sharp break in some of the institutions from many different perspectives, whether that was capital flight risk, or whether that was lowering the zero bound, or whether that was causing some sort of cash run at one of the commercial banks because now it was easy to interface with this dollar. And fortunately, we haven't seen any of those things happen in Barbados to a greater or lesser extent. But what's really interesting about that, George, is that the systems that can be designed around a CBDC don't have to have that either or scenario. It can be an inclusive scenario where a commercial bank doesn't have to say, hey, we're only checkings or savings accounts, but now we're offering digital cash accounts to our consumers. And it doesn't have to necessarily go from central bank in a one-tier system straight to consumer, which cuts commercial banks out. You can actually add the commercial banks in, which is what we're seeing in most of the deployments today. There's actually no holy grail solution in the CBDC space because they're all two-tiered. And what that means is the central bank, yes, is the one creating a legal tender in some form or fashion, but ultimately that legal tender is not directly accessed by the consumer. They're going through a licensed financial institution, such as a commercial bank, to access. They have to do their KYC, they have to go and sign up through the bank, they have to meet these criteria, pass the barrier to entry, and then they can access the central bank digital currency. While this is innovative to some extent, it does democratize payments, it opens up the payment layers. It really isn't the holy grail because this is really just a replacement of M2. But if we're going after narrow money, then we really have to get into the conversation. We really have to get into the conversation of a pure CBDC, which no central bank at this moment has done. And to the IMF colleagues' point, that might very well not be seen for many, many years, because that is an existential risk to the commercial banking market.
I would like to also
Yeah, I just wanted to add to, sorry if I may, I wanted to add, Sonia, yeah, I wanted to add to the point about developing an ecosystem that we're seeing increasingly this notion of like central banks building out a platform or multiple platforms which serve basically as one of the technology layers within the ecosystem, and then financial institutions, fintech companies, merchants, or whoever can build their products and services in the application layer on top of that platform. I think there's a lot to it, and that's something that the BOE paper, and which I highly recommend if you're interested in this topic, has also written about extensively how this concept of a platform can actually incentivize the creation of a so-called ecosystem. And I want to say that that is something that is important for developing something that is interoperable, right? Because ideally, like, you know, we don't want central banks to build something in silos that can't communicate with other central bank digital currencies or other stable coins and so on, but something that really truly interoperates, and that would be best achieved through this the platform layer, so to speak, which will also be important for like figuring out what are the kind of standards. I think one of you mentioned the importance of standards for these platforms so that we can ensure that they can interoperate across borders, across systems, and so on. And the other point that I wanted to bring up, like, and I truly believe that I agree, I totally agree, the earlier point made that a single tier CBDC is probably not the most convenient and not the easiest way for a central bank to go about issuing CBDC, simply because it adds a layer of complexity to an already complex undertaking, right? And that is not something that is in the traditional core mandate of a central bank to deal with payment systems, for example. So they would want to still be in charge of the issuance, but distribution and payment systems would probably be outsourced to various financial institutions being the traditional ones, such as banks, or, the more, screen
Yeah,
share.
I just want to show something. Sorry, I just want to show something.
Yes, that's exactly the slide that I would have shared here. It's from the paper that John has kindly pasted the link, and I think I did too. These are sort of the different operating models that could potentially exist, with obviously 2 and 3, possibly 3 being of more interest to central banks, simply because they don't have to deal with the downstream tasks that central banks are typically not traditionally not used to. And then, of course, the concept of a synthetic CBDC that my colleagues have written about, that is a separate paper that I can also post in the chat. That just basically all that really is private stablecoin issuers having their reserves parked in a central bank. So to make them more, that just adds like a layer of trust and a layer of security, knowing that the collateral is basically residing with a central bank, as opposed to in some escrow accounts or wherever, where they're not really accessible for auditing purposes and transparency and so on. So these are all the different layers that exist. And I just want to point out that, like, of course, there's downsides and upsides to each of these, right? So in the first model, the central bank will have full control. But again, as I was saying earlier, it would have to deal with like things like payment systems, like user wallets and all the customer care that comes with it, which is really not typically not in a core strength of a central bank. So I do think that like some kind of symbiotic relationship between the private sector and the public sector and the central bank or monetary authority is the future that we will see, because there's just competitive advantage. Like there's, payment system providers that are have much better applications or user-friendly design of their products or what have you, that will where there's really no need for the central banks to reinvent the wheel and build something that may not be as successful as these products that already exist out there. So, but yeah, I think the platform, the idea, the notion of a platform, of a CBDC platform, and something that is gaining increasing popularity among central banks, and you can see it throughout the literature and the papers that central banks are issuing. They're seriously considering this structure.
Okay, great.
We need to dissent here for a minute.
Yeah, go ahead.
If I
Yeah.
may,
I feel that to separate these two, that is that a central bank issuing direct CBDC to customers, and also to have a two-tier system, maybe both can exist at the same time, because there are some indications that the private banking sector has not been very successful in doing financial inclusion. Second is, during the pandemic, it is observed that the passing of benefits to customers, to the retail users, to people who do not have bank accounts, has been a challenge. So a lot of people are suggesting that there would be at least a benefit distribution angle that can create correctly. The second point is, it is wrong to say that central banks do not have competence in payment systems, nor in administering large numbers of accounts, because, for example, the US FedNow project is a payment system. They already administer big payment systems.
You're talking about the federal project, right? Federal government?
Yeah, federal government.
Yeah.
FedNow is a project of the Fed itself, the central bank. So I think that there will be multiple systems that exist side by side, and they will have different aims and different ways of operating. But in the end, it was made very clear by central banks that they will definitely provide the core infrastructure, but they will control the use of wallets, because all of those at least certify the use of wallets, because you cannot have use of wallets that are uncontrolled. And in fact, most of the thievery in Bitcoin and other places happens through wallets because of the bad security policy, security posture of those. So I believe that for a central bank to have a good control over the CBDC, they will need to administer in some ways the use of wallets as well. Maybe it'll be created by private enterprise, but it'll definitely be the central bank will be involved in the certification. And in the US, Jerome Powell made it very clear that the core infrastructure is being worked on, is going to be worked on by the central bank. And in fact, they have just recently announced plans to do so with MIT, with various other institutions. So,
Vipin, you hit the nail on the head perfectly when you said that some central banks are going to turn towards the one-tier and two-tier system, and it'll be a combined approach. And we're already seeing that. You know, in one instance, I take note.
You are mainly the project you're doing in Barbados. Is it what they call synthetic CBDC? It's public-private partnership.
You can constitute it as we're certified by the central bank and the Financial Services Commission under the central bank sandbox to create a digital variant of the Barbados dollar. Whatever you want to constitute that as, I won't enter into that arena. But what I would say to Vipin's point is that one of our particular legal tender issued central bank initiatives, we're noticing that yes, the two-tier system is in place, but the central bank is now exploring a offline smart card system with direct issuance in a one-tier model. And this is to the exact point that Vipin brought up, which was financial inclusion. You cannot force a new payment system, which then forces a new barrier to entry, such as something as basic as KYC. To most of us on this call, KYC is fairly easy and becomes a standard: proof of address, proof of location, proof of identity, passport and identification. But to many out there, this is a very big hurdle to attain. And by creating a system that ignores those persons, or persons that may be oppressed by a particular government or part of society or private sector, such as the banking sector, you need to have a way that those persons can participate in this. And so one of the biggest arguments on why a central bank should be owning the entire supply chain, shy of banks building on top of APIs provided by a network deployed by the monetary institution of the country, is that you need a public e-money system. It's a public good, it's a public utility. It is needed so that people who may be oppressed, people who may not be financially included, people who just generally would not have access under a two-tier system. You see this in Egypt. There's people under the age of 18 who cannot get bank accounts and cannot be banked. And you have the central bank wanting a solution that would allow that one-tier banking of those citizens. I use that as just a random example, but they exist throughout the world. I wouldn't say that it's as easy for the central bank to take on, and not every central bank, unfortunately, has the resources of the Federal Reserve to take on internal development. And because they don't have that kind of, those types of funding, they have to turn. So 2/3 of the world's central banks cannot afford to do this. And therefore they need to turn to PPPs, private public participations. They need to turn to the R3s, the Cardanos, the Tezos, the Bit.coms, the companies that have positioned themselves to be the experts in the technology, in the issuance, the monitoring, the suspicious activity reporting systems, the mobile wallets, the merchant solution. I mean, it's 15 products that make up a CBDC ecosystem.
I wouldn't expect you to accede to being disintermediated yourself, obviously. But I'm
Absolutely.
not
I
saying,
think that people,
I'm not saying,
No, but I think Gabriel is making an important point here. And this is like, we can't, like, as I mentioned earlier, we have 189 members in the IMF. And when you say, yes, the Fed's running Fed now, yeah, that's great for the Fed and for the US and for your citizens, right? But most of the countries, most of them, our membership, won't have the experience from running large payment systems. They won't have the capacity to handle all of this. I think Gabriel really hit the nail on the head. The other thing that I really wanted to mention here is that I don't think that for the two-tier model to work, that all of these, to reach the citizen, all of them need to have bank accounts. I mean, we have seen plenty of novel, innovative solutions, and John's on the call. He knows that don't require these people to have a bank account. Just because the bank is in charge of distributing the CBDC doesn't necessarily mean that the bank is also distributing cash, right? And people who handle cash don't have bank accounts, right? And so there's various forms of how a CBDC can be distributed that doesn't require the citizens to have bank accounts. I mean, I can give you a few examples, but I think it might be too much for this panel. I just wanted to highlight that because there are a lot of countries that are have certainly, I think the ECCU is a good example of remote island populations that have to like ship cash to the outer islands because people have no other way to get it, right? There are no ATMs, no bank presence, right? So in that particular instance, a CBDC could replace these shipments of cash that are very dangerous, right? Like, I mean, anyone can intercept that ship and steal the cash and it's gone, right? In this instance, a CBDC could fulfill a useful function for people that are unbanked, that are in remote areas of the countries, and can serve this financial inclusion goal as well as disaster relief efforts. Somebody mentioned that in the chat. I think that's a very important point, especially during COVID-19. We have seen an uptake in countries that are considering CBDC as a payment rail to provide disaster or public health relief efforts. I think that is also an important motivator for CBDC issuance.
yes.
I'd like to say something. I haven't spoken in a while. If it's all right.
Something.
Yeah.
All yours.
Yeah, thanks. There's a lot of people here with
Yeah, I will
with
wait.
strong opinions and well-informed opinions, and it's been really interesting to hear this discussion so far. Both Sonia and Gabe sort of raised this point of like have and have not countries as it relates to CBDC. And the thing that I guess hasn't been spoken of yet is, what happens in a world where, a CBDC US dollar, a CBDC, renminbi, and, ubiquitous stable coins offered by corporations. What does that do to the role and function of central banks in, the global south and in smaller countries? I mean, people in the Caribbean, Gabe, have Facebook accounts, and a lot of people receive remittances from diasporas that live in Canada and the United States and elsewhere. And if there are options to hold value and move value in some kind of USD stablecoin, whether it's issued by Facebook or as part of the central bank offering, then what role, if any, is there for the local currency? And I genuinely wonder about this because I think that, today we live in this world where there are hundreds of different national currencies with various, levels of utility and usefulness because they're, confined to certain geographies and nations. What does it do to the role of those different kinds of currencies? I mean, are we realistically talking about a world where there are 200 central bank digital currencies where every IMF country has its own CBDC, or are we talking about a world where a handful become sort of the global standard? And the US dollar, we already know, is the global reserve currency for trade finance and for financial services. But could it also be used as a de facto global reserve currency for e-money and for retail transactions as well? I don't have an answer for this, but it's something I think about, as what does the next stage of humanity sort of look like as it relates to money? And this is more an open question for the group.
So, Alex, I would love to take a first stab at that if I could.
Just want to talk to Senior. Senior, please, could you want to say something?
And Maud, I'd like to add something after Senia, please.
Yeah.
Yes, I would like to say that I carefully listening what my colleague said, and I could agree with most of things. But first of thing, Mr. Whippin, we shouldn't be afraid because right now there is not infrastructure. So people, I don't know, 50 years before was afraid of television. So today we have a television. So I don't believe that will be parallel system, but I believe what was in the slide that commercial banks in the middle will have some roles. How could I say, ready to do everything about CBDC. But this is not so important. Important is about the CBDC to achieve the aim of the CBDC. So what is the aim? If the commercial bank between me and the central bank could do that, this is not a problem. So I strongly believe that this is exactly the future. And when my colleague from IMF said that not will all countries on the world have possibility to have CBDC, I always have in my mind digital dollar, euro, and yuan, and that will be start. And so my opinion is that if we would like to achieve the goal that people have to easy access to the money or distributed money as now in the COVID era, and it's interesting that in some papers and research, which is very important for me. So we see right now in, I will mention 4 biggest economy in the world, US, Japan, Germany, and UK have dropped down the GDP the most in the history. So the study shows that with CBDC, for example, the Bank of Canada had some paper in 2018, I think, and could increase permanently in Canada GDP for 0.64, and in US 1.6% of GDP increasing. And actually, Bank of England, in one of papers said, research said that could increase the GDP for permanently for 3%. That is something in this era of global pandemic that we really should start to think about CBDC and the technical part, or if every country will be involved, that's another story. If commercial bank could give us this opportunity of CBDC as some provider or some intermediate in some period, in some short period of time, because in the end, probably all monetary system will be different, then I think we should move that way.
Thanks for this. I'll quickly move to now one of the most important topic is privacy. And I guess the first question is to Americans first, because its privacy is basically incorporated in the Constitution, which is known as Fourth Amendment, which is basically the goal of the provision is to protect the people's right to privacy and freedom from unreasonable intrusions from the government. My question is I don't give a context. CBDC shouldn't be always in blockchain. It can be central, central database. It can be also blockchain, not blockchain. But my assumption, if it's in blockchain, and blockchain basically records the data from the start to the end. And I also wanted to show you something, a bit of history of the first cryptocurrency. Let me just move this slide. So this is a paper, Security Without Identification Transaction Systems to Make Big Brother Obsolete. It was written by David Schramm back in 1985. And he wanted to make a payment system with the privacy in mind. And during the 1995 Congress, there was a Congress hearing known as Future of Money. He ended the talk with this privacy technology, whether used for electronic payments, voting, or other public expression, is the electronic equivalent of a free market and democracy. People will come to insist on it as an information right. Thank you. So my question to Gerard is how would you want a CBDC where where all the transactions viewable by the government, or something like with where transactions are hidden from the government, like cash-like? And why? Yeah, sure.
Well, I don't think it's really a matter of what I'd like to see. I mean, I think we just have to look at the realities, right? We're living in a place where there's essentially two groups of entities, right? So you've got places like China that are deploying the BSN, right? With over 6,000 different organizations participating in that, and their goal is to link the supply chain and their currency together, right, in order to have essentially global control, right, as part of their Belt and Road Initiative, right. And then you have the libertarians that don't want to have any, right, and so you know, you've got folks in governments and primarily that that want to make sure, you know, if we look at how we're organized today, financial institutions, because their regulations have to do AML KYC, right? But yet at the same time, we're deploying, you know, privacy coins that are coming onto the space. There's one privacy coin, you know, we know about Monero and Zcash, but Grin, you know, it's got no addresses, right? You know, it doesn't exist on any particular network, right? And so, you know, if you get a Ledger Nano, every time you do a transaction, it generates a different address, right? And so right now, if you know, Alex made a point about looking at the CBDCs in terms of, you know, every country having a CBDC, and if we're in a global space, right? So people all over the world have Facebook accounts, right? The paradigms by which we come to this, right? This concept that currency is sovereign to a geographic location, I think that paradigm is being smashed, right? And I think that Facebook really kind of put that front and center of the U.S. Congress when they wanted to look at Libra. So the very first thing that we have to start questioning is, do geographic national entities currently they have sovereignty over their geographic currency, but are currencies becoming global, and are those sovereignties essentially being weakened, right? And if you think about it, right now most of us engage with cryptocurrencies through a regulated financial institution that falls under the financial scheme. It requires AML KYC. But 2-3 years down the road, right, if we can do peer-to-peer transactions, right, if retail stores start accepting cryptocurrency, then the dependence on a sovereign regulated currency that requires AML KYC essentially weakens. And then the question comes, do the governments then outlaw public cryptocurrencies, right? And who was it? Andreas Antonopoulos said, you know, you can take your country out of Bitcoin, but you can't take Bitcoin out of your country, right? And as we see all these other cryptocurrencies coming up that extend, so Bitcoin clearly has limitations, right, in terms of scale, but we're seeing Lightning Network and other technologies that are competing against sovereign currencies. Okay. I think the world as we look forward becomes, from a currency perspective, I think it becomes highly more fractionalized, right? But I think it then starts to concentrate around those types of currencies. And you started with the functions of money, right? It used to be that we needed a dollar to be, you know, a medium of exchange, a store of value, all those things. But with all the different types of cryptocurrencies today and their different technical parameters, right? Bitcoin might be a really great store of value, right? Once it stabilizes, but a terrible medium of exchange because of the overhead, right? And so I might have another cryptocurrency. I might have another currency a local, like, Washington, D.C. coin that reconciles with Bitcoin. And that might become a better payment system, right? I might use smart contracts to do a method of deferred payments. And so our very concept of the function of money becomes fractionalized. I think this, focusing on, what the CBDC, what the central banks are going to do is tough, because the entire ecosystem surrounding them, I think, changes. And then this is my last point, and I know that there's so many smart people, honestly, I just want to listen. But if the US dollar, if the US deploys a central bank digital currency, it could fundamentally really threaten the hegemony of the dollar as a reserve currency because of this. When you mentioned that the US just added $6 trillion of new money supply, right? And depending on what time period, that's more than 25 years of new money supply growth, right? In 6 months. When they did that, they devalued the currency for every American citizen. But not only that, they devalued it, since 60% of global reserves are in US dollars. When the US did that, we devalued 60% of the global reserves. So countries all around the world essentially became poorer because of what our Fed did, right? Now, the question is, how long are they going to want to be in that position? And then furthermore, in the 1970s, when you talked about earlier, the changes when essentially the dollar became the heart of the financial system, we then extended our means of control to the globe. And we said, you know what? You can't deal with that country or that company or that person because we in the US say you can't. So how good is the dollar as a method of payment if the US can determine who you can pay and who you can't pay, right? And so I think that many of these countries around the world, right, are going to look at, do I like the fact that the US cannot control spending, that they increase the supply of money, they're devaluing their currency, right? And going back to that chart you said, they did it in 2008, they increased the slope, and then in February of 2020, they did it again. The question is, can the US put the genie back in the bottle, right? Have we devalued the currency that we have to do it so much? And so I think that this issue of privacy, I think that we have to look at all of the changes in the ecosystem.
Okay, thanks, Gerard. Gabriel, you were already on the pilot. Gabriel, you're there?
Yes, I am.
Okay, so I would just know the privacy features of the pilot project you're doing right now. I believe it's in Hyperledger, or I believe it's a blockchain. And are you going to store the data from the genesis, from the start till, say it goes for 100 years, or is it some point of time? Yeah. Is it?
Well, let's talk about that for a second. So obviously privacy is a major issue and a major concern. And it's something that both our organization, BIT, and any of our clients that we take on in the central banking world take extremely seriously. We spent the last 4 or 5 years developing software and technology to sit on top of any blockchain. The reality is that bit.com is agnostic to any one blockchain or the other. We've built on top of Bitcoin as early as 2014 and 15, and then Litecoin and Ethereum and Hyperledger, and we're in discussions with the likes of Tezos to Stellar to Cardano. And to us, it really doesn't matter. It's not our choice. It's the central bank's choice. Do they want a permission? Do they want a permissionless system? Is it wholesale, retail? Is scalability a concern? And when it comes down to it, what we specialize at BIT at doing is not just building all of the tools that would be needed by the ecosystem, but we specialize in building the specific layers that a central bank would need around its currency. And those layers predominantly are around how you would privately and securely mint and issue currency and not have that be exposed, how currency can be transferred in society and you don't have an eavesdropping occur where it's still on a blockchain, but at the end of the day, the end user privacy is maintained, and the viewing key, for example, might be maintained by the monetary authority only, or by a government, or by the commercial bank. And in that, you can accomplish it very, very easily, and it's at the front and center of most central banks' minds that we have spoken to. And what's interesting, if I can just dial back to the Caribbean, because Alex Tapscott touched on it, is that it's quite an interesting market because you have a trade union called CARICOM under the revised Treaty of Chaguaramas with 15 full members. And those 15 members today, you have Bahamas with Project Sand Dollar. They're now in pilot mode with their CBDC. You have the Eastern Caribbean Central Bank. That's 8 islands, countries within the union. You have Barbados already with M-Money. You have Jamaica just signaled in early August, they're looking to do their CBDC as well. And from my count right there, that's 11 of 15 CARICOM territories. Now, why this region is interesting is because they represent one of the worst infrastructures in banking in the world. They also represent one of the highest remittance costs, one of the highest financially affected areas from financial inclusion. We also get hit by hurricanes quite often. So disaster is at the front and center of the minds of these central banks. The point is,
we have to go to some of the questions. Yeah, thank you. Yeah.
Okay, I will stop there then.
Gabe, I kind of ask
thanks.
one question. I just want to ask one question to Gabe, since we're on the subject. So a lot of remittances within the Caribbean happen between nations that are part of these trade unions, and a lot of them happen between nations in the Caribbean and countries like the United States. If given the option to move money in sand dollars or move money in a digital USD or Facebook or Libra currency equivalent, why would anyone choose the sand dollar?
This is where I was getting to about why the Caribbean is an interesting model for the world to pay attention to. Because right now, 100% of interregional settlement happens in hard currencies. 85% of it's USD, the rest is made up of renminbi and pounds. However, our trade agreement called CARICOM, or the revised Treaty of Chaguaramas, has a multilateral clearing facility in there. What happens when each of these central banks turn to each other and say, hey, let's do direct currency swaps or a multilateral clearing facility that does not use any hard currencies and uses our own national currencies to settle amongst our notional value of trade or based on a basket. And then what happens when those autonomous layers are started to be used for other types of global assets? Maybe it's a basket like Libra. At the end of the day, these regions and many regions around the world are going to start turning away from settling using hard currencies and using other types of economic agreements that are fundamentally driven by code, because now these currencies are programmable, and you're going to see a rise. You're going to see a massive rise of direct currency swaps happening through these systems, benchmark weighted index currencies, trade weighted index currencies, and you're going to see a new federation of federations of central banks coming out to create their own settlement networks. And that's where this is really going.
Great. George, you want to ask? Yeah.
So actually, I do believe that the PPP that was referred earlier is obviously the most important model of way forward. We're not here to throw people out of the train, but rather to create a cooperative model both within the countries as well between the countries. But I do want to hear from the audience a little bit more of the area that was not covered so far. And I really talk about the area of inclusion of individuals. We have quite a large number of unbanked. These unbanked definitely don't even have smartphones all alone. So I would like to see the how and what are the best plans forward to create a system of inclusion to actually empower this individual to participate actively in the economy instead of just simply being disenfranchised as it has been done in the past.
Yeah, I would also add to his question about programmable CBDC and pandemic. Vipin, can you elaborate on George and my question? Yeah.
Yeah, the suggestion was to have direct Fed accounts. And I agree with most of the people that we do not have to have just one model. Multiple models will always always prevail. But for narrow benefits distribution, it would be useful to have this. Plus, people in the US also talk about having post office accounts. The post office is handling accounts, which used to be the case in the US, and it also is the case in the UK. So since post offices are scattered across the nation, even in very small rural areas, that would be a ramp into getting benefits payments sent directly to the people using CBDC. And also UBI, like if there's ever a universal basic income, like there were a couple of distributions under the federal under the Federal CARES Act of money that happened through, that can also happen through direct Fed accounts. But the point is there will exist a multiplicity of payment methods, multiplicity of solutions, and the ramp will be slow in certain cases. And the point is we are not here to talk about what is not possible. We are here to talk about what's possible. Privacy is another issue that you mentioned, the Fourth Amendment and so on. But Fourth Amendment is misinterpreted. It just means you need a warrant to search, not that you have infinite privacy to do whatever you want. It is based on a principle that there has to be an independent authority who will give you a warrant. But the legal situation has to be strengthened in terms of privacy for transactions. Maybe smaller transactions will be out of the remit, and if you transact like even in cash, you're not supposed to have huge amounts of cash without declaring it, without KYCing it. So all of these have to be in moderation. We are not going to go to one extreme or the other. We're not going to prevent everything or allow everything. It's going to be somewhere in the middle. And how do we do it?
Thanks a lot. We just have a couple of minutes, so I would love to give this as an opportunity to everybody to has a closing statement. Sonia, please.
Sure. I mean, not as much of a closing statement, but maybe to wrap it all up. I don't think there's a silver bullet solution for CBDC. In some instances, in some countries, CBDC may not even be necessary, right? Like if they have, for example, fast payment systems, it might very well solve their problem, the problem they're trying to solve. What we believe in, and I highlighted that in the paper very much, is to really figure out, to nail down what is the problem that the central bank advantages. May not be the wisest to choose a technology before figuring out what am I trying to achieve, what are my specific requirements, and then really choosing the technology. I think that is really important to keep in mind as central banks are going through this, because a lot of these central banks may not have a very sophisticated way of figuring out, like, running proof of concepts, right? And they're really jumping on a technology or a solution just because they heard that it's great, right? So it's important to, and this is where the IMF comes in, where we can assist with some of these important questions. But truly, there are these core design principles which we think that all central banks should adhere to, like cybersecurity or proper infrastructure that should be in place, or the regulatory framework. And then there are specific design choices that are country specific, such as, for example, how to balance the need to comply with KYC, ML/CFT standards, and ensuring that there is sufficient privacy like we have in the use of cash now. Should the CBDC be interest bearing or not, or how much flexibility we want to build into the product design to future-proof that currency in the future. Those are all country-specific choices. So I don't know that there's a universal answer for every central bank. It really will come down to the structure of the economy, the financial system, the strategic objectives central bank is pursuing to answer some of these important questions.
Thanks. Alex, sorry, 30 seconds of closing statement.
Yeah, I'll keep it brief. I think there's two ways to think about this. One is how could CBDCs change the nature of how things are done today? And then there's the other question, which is what is the future actually going to look like? And then I think that's the thing that people maybe should take away from the comments that I've made. I've really enjoyed listening to people who are real domain experts and practitioners who are really thinking about sort of deep design questions, because I think those are all really, really important. Equally important, I think, is to think about, will we actually have a world where there are hundreds of central bank digital currencies? And if not, then what are going to be the dominant ways in which people will exchange value and store value? And if that means that certain large governments or intergovernmental organizations like the EU and a few gigantic global corporations are ultimately the monopolists of the digital money of the future, what does that mean for questions of sovereignty and central bank autonomy, and for how people do business in these different countries all around the world? Those are questions that deserve really thoughtful answers. I don't pretend to know what exactly those answers are, but it's pretty safe to say, I think, that in a decade, things are going to look very, very different than they do today.
Thanks. Senior, just 30 seconds, your closing statement. Yeah.
So I will say just quickly that I think that very important is transparency, and of course with respecting of privacy, but transparency and trust in what we are doing with CBDC will adopt the CBDC much faster. Also, the role of CBDC could be the minimize of tax fraud and tax evasion. So it's a boosting of revenue of the state budget. So it is, if we know what is the tax gap in the world, that's really something that we cannot lose anymore. So it's really scared. And I think that technology and legislation which will follow the CBDC should be compatible. So we don't want the situation as a GDPR, so that there are some tensions between GDPR and so we should build it parallel. So the experts for the both sides should be involved in that. So I think that maybe some big risks for me is wrong design of choosing design of whole system, the technology design. Thank you.
Gabriel, closing statement. Yep.
Yeah, so in closing, I would say that what we can expect to see is, I think Alex placed them in three categories, which is the rise of monetary authority digital currencies, or CBDC, the rise of private licensed financial institution money, and the rise of permissionless democracy-based money. And at the end of the day, all three of these are heading in the same direction, which is becoming more programmable and more interoperable. And at some point, we're going to meet an inter-central bank settlement system that is one that's driven closer and closer towards efficiency, which comes in the form of decentralization. And we're heading towards that. So that's...
Thanks. Vipin? You're mute now. You're in mute. Yeah.
Yeah. The closing statement. I have to say that, there are not going to be one path, obviously, as everyone has said. But the path should include standards, and we are working hard to do that because it'll increase interoperability and also provide assistance to smaller countries through the availability of open source software, the Fed and MIT have said that they will release all of their findings, not just software, but also other resources into the open so that everybody can benefit from that. We have prepared a white paper that is not just a white paper, it is an implementation sketch. And we have a lot of different ways in which we can compose a solution based on the needs of the central government or central bank to target certain things in our solution. And we are going to release it into the open, and in the next few days. It is under review right now, but it hews to the philosophy of openness and multidisciplinary approach. That means it's not just technology, obviously legal, regulatory, monetary policy, economics, all play into the picture. And no one takes precedence over the other.
Thanks. Now, 30 seconds from our president. He talked about the coming government blockchain week next year in March. Gerard, want to talk 30 seconds about something about this event? Gerard, are you on the call?
Yeah. All right. Yeah. So March 2021, we're going to be assembling in Washington, D.C. We have, and I just dropped a link for the cornerstone event, which is the future of money governance and law. I would say, if you're interested in the subject, if you go to gbaglobal.org, we have about 8 gigs worth of information on related topics. But what we'll have in March 2021, it's a 1-week event. Let me see if I have. Here we go.
So it's more than 400 professionals from government and blockchain professionals around the world will come in. And I guess Tapscott it's going to speak, I believe.
Yep, we've got 2 of our keynote speakers, Don Tapscott, and then we also have Scott Sternetta. So they're just both legendary. But on Monday we'll have an event at the British Embassy. We'll have it also. That'll be on international aid and development. We'll have at the DC Government Center. We're going to have something for state and local. We've got a fintech reception. I think that's going to be at the Embassy of Bahrain. We've got blockchain for small businesses and economic development at U.S. Department of Commerce. We're going to have cryptocurrency, a certified cryptocurrency investigator courses, along with blockchain investigation and cybersecurity forum. And I'm not sure where that's going to be. We're going to have a blockchain for lawyers at the Library of Congress. And then the Keystone event will be at the United States Capitol. It's in the Congressional Auditorium. So this is where the joint sessions of the House and the Senate meet. It's a 450-seat venue actually in the Capitol. And we're going to have leaders from all over the world. We've got communications and invitations out to the comptroller of the currency, senior people at SEC, financial regulators from countries all over the world. We're IMF, World Bank, UN, all that stuff. So, and I believe Sonia is potentially. I forgot if she's already got the approval, but hopefully we'll have there as
I
well.
will follow up. It's been a period of time when people are on annual leave, so I haven't heard back. I myself am actually on annual leave now, but couldn't miss out to be with you guys today.
Thanks everybody, and thanks for attending, and please subscribe.
Thank you all, and please get in touch at Twitter and LinkedIn. Happy to check out the paper, and let's keep talking.
Yeah, thanks, Sinia. Thanks.
Thank you very much, all.
Mo, thank you for putting this panel together. You did a great job.
Thanks.
Thank you.
Bye, everybody.
Bye. Thank you.